Ooh, baby, what a move this afternoon. What a fantastic day. What a fantastic week it's been. Hope you guys made some money out there. Now, I don't care how much money. I know it's been a great last couple days, but let's get refocused here right now. We got 1 day left of the week, of the month, of the quarter. The two-legged correction is underway. We've been talking about that all week this week. We got some big news coming tomorrow, and tomorrow's a Friday, so we have a lot to cover in another very important video. You know how we do it in these lessons. I'm going to cover my favorite trades in the video tonight because I want to make sure you guys have a game plan to make some moolah on Friday morning. Now, before we jump in and get the party going tonight, make sure you subscribe. I don't want you to miss tomorrow night's video, so make sure you subscribe so you don't miss out on the new stuff we post every evening. And if you like these lessons, if you like these videos, do me a favor tonight, will you? Hit that like button for me. Give me a shout out. Give me a holler. Introduce yourself down in the comment section below. All kidding aside, though, thank you so much for tuning in. Let's get ready for Friday, though. Man, it's been a great week so far. Let's keep the good times rolling into the end of the month, end of the quarter. Now, starting off tonight on the 60-minute time frames on the NASDAQ and the triple Qs, the S&P, and of course the SPY. Remember, I like to use the 60-minute time frames to plan my trades for the following day, and then later on in the video tonight, I'm going to drill down to some tick charts, some faster time frames that will make the entry timing a lot easier for us here tomorrow. So we'll start off with the bigger picture, and we'll drill down and talk about entry tactics. That way you guys have a roadmap to make some money on Friday. Now, on the 60-minute time frames right now, there are really kind of two main components we're looking at right now. We know we're bearish overall. You don't need me to tell you that right now. And as we've been talking about all week this week, been waiting for this two-legged correction. We are underway of the two-legged correction. As I always remind you guys, think about a measured move off of that low. We are almost there. We probably have a little bit higher to go up here, and I'll bet there are a ton of sellers. And one of my favorite trades, a bunch of bull traps, waiting for that run, right, going back down. Remember, the goal right now is strong move, two-legged correction, retest of that low. Strong move, two-legged correction, retest of that low. We probably have a little bit more space to go tomorrow. We'll talk about that in a moment on the tick charts, but I love the idea of some bull traps up here, and we're going to go over all the details, of course, here tonight on the video. So before we jump in, though, into the tick charts, before we talk about entry tactics, we have, I got to catch my breath here. We have a lot to talk about the schedule here for tomorrow. There are five things on our radar for tomorrow. Are you ready? First of all, end of the month volatility, end of the week, end of the month, end of the quarter. We always expect to see an uptick in volatility, so plan accordingly for tomorrow. If that means smaller position sizes, then so be it. News tomorrow morning. Second thing, personal income. That's the big news tomorrow. That's the big news you could easily say of the week this week is that personal income number at 8:30 Eastern time. Third thing for tomorrow, consumer sentiment at 10 o'clock Eastern time, specifically the inflation expectation aspect of that consumer sentiment. Remember, anytime we have 10 o'clock news, you best be paying attention. The fourth thing is the government shutdown drama. Hopefully those crooks on Capitol Hill will figure out some way to get a deal put together here tomorrow or Saturday. Supposedly the bank account is empty as of Sunday, so that is definitely a known unknown, a big variable for tomorrow. We'll be keeping an eye on that tomorrow morning. And the final thing is tomorrow's a Friday. The final thing is tomorrow's a Friday. Remember, the mindset of a Friday. Well, what happens on Fridays? Fridays get lower volume. They get illiquid into lunch, into the afternoon. So Friday mornings, early in, leave a runner. Early in means get into positions early. You really got to have a good reason to be trading on Friday afternoons. Doesn't mean you can't be holding a position, though. So get in early on Friday. My mindset is early in on Friday, leave a runner. Fridays love to run. So keep that in mind. End of the month volatility. Personal income at 8:30, 10 o'clock consumer sentiment, government shutdown drama, and of course, Friday mindset. Get in early, leave a runner, leave a runner. The runners we see on Friday afternoons can sometimes make your entire month. So keep that on your radar. Now, back to our charts though, right? Because it's good to know when the news is. It's good to have the right mindset going into tomorrow morning, but we all know this by now, right? The money is made on the chart. So why don't we go over my favorite trades here now for tomorrow? Let's start first on the Emini and the Spy, and I will wrap it up tonight on the NASDAQ and the triple Qs. Keep in mind, both of these markets are very similar, so pretty much everything is interchangeable. Now, as I mentioned in the introduction, we are working our way through that strong run down, that two-legged correction, and that retest of that low. You will see in a moment, it feels very bullish right now on the lower time frames, the higher time frames, and we're hoping that bullishness will lead into some bull traps to let us trap some buyers in and run back down to those lows. Be aware before you get too aggressive up here. There could easily still be quite a bit more space, especially on the NASDAQ right now, to go higher. So we're not going to be picking tops on this. We'll talk about entries here in a moment, but that's the goal, right? The goal is get this thing up, trap those buyers in, get those buyers thinking this is a reversal, and dump the sucker back down for tomorrow. Now let's drill down to our tick charts. Remember, tick charts make everything easier. We use tick charts a lot in our trade room. This, of course, is a 7,000 tick chart, upper left-hand corner. And if you're watching for the first time right now, welcome aboard. This is the 21 EMA, right? 21 EMA, by far the most important tool we use every morning in our trade room. There are three important clues on the tick charts right now that are kind of tipping us off to where we think the best money making trades are going to be for tomorrow. Now, the first thing is you have to look at everything right now through a bearish bias lens. So we're very bullish in the short term, but you have to remember where we are in the big picture. We're still overall bearish. Now, most important thing, strong run higher. We got that squeeze we were talking about last night, and that beautiful crown reversal right off of that high. Bottom line is, anytime we see a strong move like this, we have to expect a pullback and a retest of that high. So it makes perfect sense right now. The buyers are trying to push this thing and run back up to retest the high. Now, as we go higher, we have just a plethora, a whole bunch of overhead resistance levels. You can see them up top here on the 60-minute chart as well. So think about how this all comes together. Anytime we see a strong run up like this, remember, overall bear market, we pull back and retest the high. The first thing I look for is what I call a double top reversal. These are very, very simple. If you're taking my free classes right now, I talk a lot about what are called failure patterns. Failure patterns are by far the most common setup we see each day across all of these markets. When we go back and retest this high, this is a horrible place to be buying, right? Overall bear market, up and overhead resistance. If we can get some buyers coming in and trying once and trying twice, I'd like to use a failure pattern, what I call a two-try failure, because we are so bullish in this scenario, in the short term, of course, to trap those buyers in and use their stops to fuel this reversal going back lower again. So imagine we take out that high, right? We don't keep going through the high. We'll talk about that here in a moment. The buyers come in, they try once, they try twice, and we can now grab that sell order and look to sell right into where those stops are and look for ultimately a failure back down where, probably back to retest these lows down here. And this may end up becoming one big trading range. We'll talk about that more as we go. So as we're trying to run higher here, right, trap those buyers in, let them try a couple times, use their stops to fuel with a failure pattern, basically, right, and try to go back down to retest that low. Now, like I mentioned earlier, we could keep going. There's a lot of open space above us on the 60-minute. So if we do accelerate and run higher. Well, look back here, right? Look back here. If you watched the video last night, we got pretty much what we talked about last night. Strong run up, the buyers come in, they try once, they try twice, and we get this bull trap right there, this bull trap right there. Now, in my free trading classes, this pattern is called a crown reversal. What it does is it combines two patterns. It combines a failure pattern along with what we call a trap pattern. In this case, it's a bull trap. Remember, if we make a real strong run higher, that's a lot of momentum, right? And all that momentum is going to want to pull back and retest that high. So in these scenarios, we don't pick the top, right? We don't pick tops and bottoms. That's a rookie mistake. Let those buyers come back. Let them try once. Let them try twice. And remember, in this scenario, the assumption is momentum's a lot stronger. It's a lot stronger, right? We rip up, we run higher. A lot of resistance up here. But again, we don't want to pick the top here. So instead of picking the top, I'm going to combine, like right there, right? I'm going to combine one try for the buyers, two try for the buyers, and grab that bull trap off the high. Now, look how this pattern sets up. It's a lower low in price, right? It's a lower low in price and a trap above that high, a trap above that high. Again, I call these crown reversal patterns. They simply wrap together a two-try failure and a bull trap, which reminds me, by the way, if you're watching for the first time right now, this may all seem completely foreign to you. You probably have no idea what I'm talking about right now. But not to worry, I teach all of these pattern setups, especially failures and trap patterns. I teach all this in my free trading classes on our website. So if you haven't taken that free course yet, if you're one of the few folks who haven't, I'll put a link up here for you in the upper right-hand corner. Grab that link. Take that free course and learn that strategy, because the strategy you'll learn in that short video series will teach you a stupidly simple trick we use every morning in our members trade room to know exactly where the best winning trades are going to be that day. Most importantly, you'll learn my 4 favorite entry patterns, definitely failures, definitely traps, a few more favorites. There are hundreds of examples of my favorite setups inside of that free trading class. If you hate missing the best trades right now, definitely grab that link. I'll also put, by the way, if you can't get the link up top there, I'll put all the important links in the description of the YouTube video tonight. Let's talk about some different variations of this, right? Oftentimes what happens is we get these strong runs up and there's so many bears up there, it just gets whacked, right? It gets whacked back down, okay? We call these V-top reversals, okay? V-top reversals are very, very simple, but you got to have the right game plan for it. Now, remember, my goal is to trap these buyers in, right? Get some bull traps and short back down again. But what if we don't get that, right? What if the market goes up, rockets up, there's a ton of sellers up here, and it gets whacked right back down? What'll happen is it'll start grinding down off of that low. When you see that grind, that's your giveaway. The most important thing on these V-tops is do not chase it as it goes lower. Okay, whatever you do, do not chase it as it goes lower. Draw a trend line off those lows, bring it up around the highs, and then look left. Try to find a prior swing. You guys know me, I love traps. Look left and try to get in above a prior swing right off the high of that channel. All right? This is why you don't chase it as it goes lower. You wait for the pop up and then wait for really any of the entry patterns you guys learn in the free trading course. I love bull traps like I'm showing in this one. It could be a buyer failure. It could be a pullback combination. It could easily be a strength move going lower, right? Big, strong chunks going lower there. Strength move going lower. Again, you'll learn more of those inside the free trading course. That would be a V-top reversal. Now, really, for the most part, right, traps are going to be your best friend if we do get that pop and drop back down again. So we may end up running higher. We may end up getting that crown reversal, right? That 2-try, and it may end up dumping from there. And from there, once again, a trap will be your best friend trying to short this thing going down again, right? Again, it's a 2-try failure with a trap high because the strength of the move going higher. And again, I know this is all new to some of you guys, but you'll learn more about this in the free trading classes, right? So pop it up, trap the buyers in, and then again, if it rolls over here, right, rolls over, don't chase it going lower, because what's happening is the reason why the market goes lower like that is because buyers are trapped, right? The market moves lower because the buyers get stopped out. Okay, once those buyers finish fueling the move lower, the bears are not going to want to come in. Eventually, sellers will need to enter the market, and they're not going to want to do it as the price goes lower. They're going to want to sell it as it goes higher. My favorite trades is to mark off a trend line off the low, up around the high, and then whack it right there, right? Get that short right there, right? That's that trap. That's that trap as it rotates lower. And then, and again, later on in the video, we'll talk about if it goes lower here, because that will probably be the more difficult scenario if it runs lower here for tomorrow. But what if it squeezes? I mean, it's not likely tomorrow, but tomorrow's a Friday, end of the week, end of the month, end of the quarter. Again, on the 60-minute, we probably do have some more space to roll up here. I wouldn't totally be shocked if we find our way all the way to 43.83, even 4,400. It's been a huge move going lower the past week now, right? Ever since FOMC last Thursday. So what if it squeezes, right? Fridays are notorious for low volume runs. If it squeezes higher, our concern will be we don't want to buy high. So as it runs higher, and these are always tricky ahead of time, right? I can't really anticipate this right now, but if we open up in Asia and the market simply takes off and runs to the upside, that's that squeeze I'm talking about. If it starts to rip and run higher, just remember how this pattern works. Strong move, shallow pullback, higher high in price, right? And a trap below that low, right? Strong move, basically strong move, higher high in price, and that trap. Now, for me personally, I would take this as a half size position, just because it's a little more aggressive, right? You're buying relatively high, you know what I mean? So for that type of trade, that's more of a half size or a quarter size position. But again, this will be more of a personality thing, right? It's a little bit difficult for me to predict that for tomorrow, but tomorrow, end of the week, end of the month, end of the quarter, if it was to really start ripping and run higher, the goal will be to buy as low as we can. It may end up popping up, and then later on in the move, it's 1, 2, back down from there. You know what I mean? So we'll kind of gauge that as we see it tomorrow morning if it does start to rip higher there. All right. Now we've got a pretty good idea of how to make money as this thing, right, goes higher. It's that double top, 1, 2, back down. It's that rip and that crown reversal. And again, remember, when it drops like that, look for those traps, right? It's one of the most important things, because sometimes you may not get a great signal. Let's face it, right? I love to get a crown reversal. We love getting crowns, right? But sometimes we not get it. We may not get it, right? So don't force it. If it drops like that, then you know where that trap is, that lower low in price, right? And that trap high, that will at least get you in on the way back down as we go. All right. Now, one more scenario I'm going to talk about here for tomorrow is, what if we go lower? Right? What if we end up going lower? This is a range, basically, right? It's basically a bullish trading range. So as we go into a trading range right now, there could easily be bear traps below that low. This could also easily roll over, because again, we are an overall bear market. Why don't we move now to the NASDAQ, right? The NASDAQ, of course, is very similar. You could easily say it's almost identical to the S&P. Same basic idea. It's a bear market overall. We've been talking about this all week this week, but in case you weren't here earlier this week, been waiting for that two-legged correction. Remember, two-legged corrections are usually a little bit larger than a measured move, right? So right now, we're right about a measured move right now, right? So we're right about there. We could easily end up running a bit higher here up into that channel, and again, that'd be a great spot for that crown reversal, right, into that trap, right, on the way back down again. So same game plan here as we mentioned on the S&P. Now, one thing you'll notice right now is this is a trading range on the 60-minute. And are you seeing this too? Are you seeing that pendulum swing, right, up or down and back up again? In the free trading classes, we talk about ranges. We talk about a lot about ranges in the free trading course. And one thing about ranges is the amount below the range, amount above the range. That looks pretty convenient, right? Looks pretty convenient. So again, great spot for a reversal, a bull trap going back lower here. But let's now get ready for that rolling over here, because this is where things get a little bit hairier. And the big problem, the reason for it is, back to our tick chart here now, we basically have a bull move into a trading range, then another pop up into another trading range. We talk about breakout pullbacks a lot in this video, right? So whenever we see a range like this and a breakout, we oftentimes see a breakout pullback, and sometimes the breakout pullbacks go up to these highs right there. We talked about this last night, right, on the video. A lot of times they'll pull back to that highest part, but a lot of times too, though, they'll pull back all the way to the top of that trading range. So what this basically tells us right now is we've got to be careful if this thing rolls over. It isn't a guarantee we make that run all the way down and take out those lows. We've got a pretty easy, I think the easier game plan is the price going higher here for tomorrow, just because, again, strong run up. We expect that retest of the high. We expect there to be a lot of bears up there. Also, probably some rookie buyers. We could trap them in and sell back down again. As we go lower here, right? As we go lower here, the key is going to be how the market reacts as we go lower. For example, if we take off to the downside, but now as we pull back, we start seeing bears trying once and bears trying twice to keep it going lower. Right? So as they run lower, if we don't, well, for example, if we run lower and we begin to make a series of lower lows in price, right? That lower low in price tells us now that bull traps are going to be the best bet selling short on the way down, right? But if we end up snapping lower, but we don't get those lower lows, now we pull back and the bears try once to keep it going lower, go higher, right? Higher high in price, go twice trying to go lower. Yeah, see, now the bears are struggling. Now we've got that breakout pullback on our radar. It's a strong run up. Remember, anytime we see a strong move, they got one thing on their mind, right? They want to go back and punch their ticket at that high. So this could be a great spot right here for a two-try failure. Trap those bears in, use those stops, right, to fuel that move higher. And remember, what did we talk about last night on the video? Last night we talked about anytime we have a trading range, what do we do again? It's failures at the edges and traps as we rotate, right? Failures at the edges, traps as we rotate. So as we go higher, where does the market want to go? It wants to go back and take out that high, right? It's obvious because, again, it's a strong move up. There's one thing on their mind. They want to retest that high. As we're making our way up to that high, though, we don't want to chase it. I look for those bear traps to get in as we're going higher. All right. So again, if we roll over and go lower, which should not surprise anybody, nothing should surprise us anymore, right? The markets are going to do what they want to do here. Nobody knows exactly what's going to happen for tomorrow. The key is to put a game plan together, because if you make predictions, people like to make predictions. People love it when I make predictions. But when you make predictions, you blind yourself to all the other scenarios, because what if we don't get what we want, right? I want to make sure we have a game plan to make money on all kinds of scenarios. That way you've got a toolbox full of tools the following day, right? Gives you more chances to make money. So if we roll lower here, watch how that price pulls back. Okay, if it goes higher and the bears start struggling, remember, sellers want to sell high. So watch as they try to get short here, and then think about those stops getting hit, right, with a two-try failure. And then again, as we're popping up here, higher high in price, and that trap, and your target is back up to retest the high. And then remember, you can then initiate the same game plan we just talked about as we go up, right? Trap the buyers in and short that sucker back down again. This could easily become one big trading range, and we trade the rotation back and forth. Failures at the edges, traps as we rotate, as we talked about last night on the video last night. All right, guys? And then again, the giveaway will be if we, for example, if we go up and then kick back lower, right? Or if we go up and then roll back lower, the key will be underneath this low, right? Do I run lower and begin to grind going lower? If I do, there's my channel, right? There's my swings, there's my entry off the high. And of course, I'm not going to go over all the specific entry tactics we use in our trade room, but again, grab that link up top there or down in the description. You'll see a lot of examples of those right inside the free trading classes, right? So if it pops and begins to grind going lower, remember, if it pops and grinds going lower, where does it want to go? It'll want to take out these lows over here. So make sure you're selling as high as you can. That's kind of the rule of thumb, right? Don't chase it as we try to go lower here. Wait for that pop up and sell, right? Sell the bounces. This could also be seen as its own breakout pullback, right? This could be a range up here. This could also be a breakout pullback of the underbelly of that trading range as well. So it really kind of fits all together, right, very well here. All right, guys? So again, if it reverses lower, bear trap, right? Basically a failure pattern going back up. If it pop, and again, this could go up and then back down. But if we pop lower and we start grinding down, think of the underbelly of this area. Think about drawing that channel off of that low. Think about finding those swings and grabbing, again, any of the entry patterns. Bull traps would be my favorite. Failure patterns off the high, right? Pullback combos. Probably not a strength trade down here, right? If you guys are learning the strength trades right now in the free classes, right? Probably not a strength trade down there, right? Because you'll be selling a little bit lower than ideal there. Definitely a strength trade though if it pops up, failure off that high and then dumps, right? That's a beautiful spot for a strength trade. You guys know what I'm talking about if you're taking that free class right now, right? Because that way you're selling nice and high, right? Rather than applying those strength trades down around those lows. All right, guys? Boy, oh boy, very exciting week so far. Finally getting some good volatility. Will this continue tomorrow? The game plan's ready. Now all we need is a good night's sleep. Come back tomorrow morning, see what happened overnight, and trade our plan. Now, end of the month, end of the quarter, tomorrow morning, 8 o'clock Eastern time. The best place to do this, the best place to learn this stuff is with me every morning in our members trade room, 8 o'clock Eastern time. The plan is ready. Tomorrow morning, we'll execute that plan together. I'll put all the important links we talked about tonight. I'll put definitely the free class links in the description of the video tonight. Grab the free course links, start there, learn the basic strategy, get your feet wet on that, get moving in the right direction, and I'll get you warmed up for trading with us sometime soon in the morning trade room with all the advanced members. And if you want access to our morning trade room, I'll put all the membership links, the breakdown in the description as well. If you got questions or you need help along the way, if you need help, we're always here. Definitely don't be afraid to send me an email or jump on live chat. If you got questions, if you need help, definitely don't be a stranger. We're here to help every step of the process. Now, let's get out of here. Enjoy the rest of your evening. Hope you guys had a fantastic day out there. Hope you learned a lot tonight. Hope you used this knowledge to make a killing tomorrow morning in whichever market you want to apply to. But I'm out of here. As always, my name is Joseph. Be well, be nice to each other, and you better be here next time. Adios, amigos. Bye-bye for now.